Deb, thank you very much for talking to me today. And my first question is about what happened on the stocks market. It went down, especially in the energy sector. And it happened because of the oil price decline. Though for a few days, people thought that it will hit $150. What are your expectations on the oil prices and stocks movements in the next month?
Well, first, I am not bullish on crude oil. And the reason for it is that I think the global supply is there and the demand isn't. If we just let's just start with the Middle East. And if we think about Iran and the possibility of these sanctions cutting down their, their production. Well, Saudi Arabia alone has the ability to increase their production. In fact, in recent contractual sales that Saudi Arabia has made, they have said to people, I have excess oil if you want some. So they even made that offer. So I think we have enough supply globally to take care of anything that would change. For example, in Iran or in Norway, where they have a strike going right now. We don't really see supply disruption that has an impact globally. Now, if you look at the United States, the expectation is, as we go into the end of this year, that the United States could become the largest producer of crude oil. And that would be around 12 million barrels per day. That's the current estimates. There's only 3 countries that produce more than 10 million barrels a day. That's Russia, United States, and Saudi Arabia. And it looks as though the United States may end up being that largest producer. We're not energy independent here, though, because we consume a lot more than we produce. So we're still a net importer. And Canada is the largest importer of crude oil to the United States. Well, that's one reason. I just don't think the global supply isn't an issue, and in terms of being small. Also, if you look at China's manufacturing data that we've seen recently is somewhat soft. So that also implies if manufacturing is going down a bit, that means energy consumption goes down as well too. And so we're not seeing that demand that we're looking for to soak up the supply. I have felt that now for over a year. I still feel that. Now if you look at Saudi Arabia, if you look at OPEC, if you look at Russia, they would like to see crude oil at $70 or $75 a barrel. I really think it should be more like $60 or $50 a barrel based on the current fundamentals that we see. So it's difficult for me to see crude oil at 150 when we really don't have the dynamics of fundamentally to drive prices to those higher levels. So my opinion for the rest of this year, I am not bullish on crude oil.
Now that Trump and Putin are official competitors for European gas market, how markets are responding to that and what traders should anticipate?
Well, I think there's a few things to think about. Let's just look at the current situation. If you look at the European Union, they import 69% of its natural gas. And the latest data that we have, it shows that 37% of the imported gas comes from Russia, and 33% from Norway, about 11% from Algeria. So Russia's market share is growing.
Yes.
And, if you look at Germany is the largest consumer of natural gas, and they are scrapping their coal and nuclear power plants. So it makes gas more important as a fuel in Germany. And they also use it not only for power generation, but the chemical industry and steel industries are very large consumers of natural gas. So Russia's market share is going to grow by that nature of demand. And even though the European Union has said they're going to cut their dependency on Russian gas, especially after the crisis we had in, I think it was 2009 with Ukraine, their consumption actually is at major levels. And the issue is, with the price of Russian gas, it's cheaper than the alternative supplies, including LNG coming from the United States. Our cost of gas in the United States is about a third of the cost of the European equivalent. But it ends up being more expensive when you add the cost to liquefy that natural gas and then to ship it on tankers to terminals in Belgium or Netherlands. Poland's building LNG terminals. We're seeing other countries trying to do that to allow other supplies to come there. But the U.S. Natural gas product at this point is not really competitive when it comes to price. So, one thing about this long term now is that as American LNG price does come down, and it may, to be competitive with Russia, it forces Russia to keep their prices lower to protect its market share.
Yes.
Right? So
Yes.
if there's a dynamic there that is good for the European Union, because Russia cannot do some games that maybe they could have in the past. People are afraid that they could, by them bypassing the Ukraine with this new pipeline, that they can cut out revenue that goes to the Ukraine, that they may be able to cut out former Eastern Bloc countries from gas as they feed Germany and Europe. I mean, Germany is the world's largest importer of natural gas, and it imports about 94% of its natural gas. 35% comes from Russia, 34% from Norway, and 29% from the Netherlands. The Netherlands source, though, seems to be somewhat drying up a bit. And so there are some dynamic issues. There's political issues. There's concern about the ability of Russia to cut off gas to the Eastern Europe while selling to Germany and Western Europe. We know that there's this increase in demand that's going to occur naturally. So there's some interesting things. Now, one thing that I think we should keep in mind, that when they complete this new pipeline, Russia, the idea of them cutting off Eastern Europe, Germany's needs are higher than the planned capacity of this new pipeline. And plus, when Russia cuts off supply of one pipeline, it's costly. It costs them money. This is an important source of revenue for them. So there's a lot of dynamics there too. So if Russia feels there is another competitor, maybe it is the U.S., that it puts a damper on prices there to an extent. Europe is Russia's main gas market. We want to remember that. And again, for them to cut it off, it would be costly for them to do that. And so the planned pipeline is likely to increase EU exports, I should say EU imports from Russia. But an expected decline in production, I just don't see that happening.
Do you think solar or wind power can play a significant role in here, or no?
Well, I think it's done better than what most people expect. But if you look at the near term, over the next, let's say, 5 years, what amount that we can produce by wind or solar, can it really offset the production of electricity using natural gas? Or, coal is being weaned away from it. Many countries are. Natural gas burns 60% cleaner than coal.
Yes.
So it makes sense that we'll see that production, right? It's the ability for wind and solar to be the major source. We're not there yet. So could it be 10 or 15% of energy production in the next 5 years or so? Yeah, quite possibly. Because we are seeing results that I think are better than people expected. But to say that we're going to really be independent away from natural gas, I don't see that anytime soon. Not within the next 10 to 15 years.
I see. Dan, but during such changing market situations and the superpower standoff on gas, what financial instruments are the most popular ones and why?
Well, it depends on who the audience is. If we're talking about investors, they typically would have refiners, the oil exploration companies, their stocks would be a common investment. Most pension funds and large institutional investors will have energy companies in their portfolio to have that balance. So those would be typical for investors. And along with that would be the energy itself. So if you want to talk about that as an investment, then you and I would be looking at futures, an ETF, or something that's a direct investment in natural gas, a direct investment in crude oil, or heating oil, or gasoline, petrol. And I think if someone wants that exposure, that may be a better play. For example, if you and I buy a refining company, let's say we buy an exploration company like ExxonMobil,
Yes.
one of the largest companies in the world, right?
Mm-hmm.
Does that stock move like crude oil moves? And they don't necessarily move in sync, because ExxonMobil is involved in many areas. So there's two issues for that stock, is that it's not 100% correlated to crude oil. It's also diversified as a company, and it also has the market impact on the stock. In other words, if the stock market is falling out of bed, if it's going down, it's going to drag ExxonMobil down with it to a certain extent. It's what we call systematic risk.
Mm-hmm.
So there's the issue, right, ExxonMobil as a company, and then the risk of the market pulling down ExxonMobil. But if I'm looking at crude oil by itself, I want that exposure, or natural gas, then I would look at products that deal only with that, which is typically futures, in some cases an ETF.
I see. But what, in addition to what we just discussed, the standoff, the changing markets, what are the factors, or are there any factors that are affecting LNG market right now?
As far as their influence, it's the unknown. Mm-hmm. We're not really sure, is demand going to stay the same for it, not only in Europe, but globally. We're seeing the efforts that many countries are making to create terminals. Like a few years ago, when people said, well, the United States should be sending their natural gas to help their friends in Europe out. When the Ukrainian situation occurred and Russia was squeezing supplies to Europe. But the fact is, the United States didn't really have terminals to export natural gas. We have limited capabilities of that. Well, those terminals have now been built. There's 3 or 4 of them. We can go on both coasts. We're seeing countries in Europe building terminals. So I think some of the changes we're going to see in natural gas that can have an influence is on the transportation side. That natural gas may actually be a commodity that we can think of being moved around globally, where now it's pretty much a regional type product. So in the future, I think the ability to access LNG supplies is actually going to increase quite well.